So in our today's class, we would be discussing about World Bank. So we might have heard about the role being performed by World Bank. Basically, if I tell about the track record, see, during the time of World Bank, during the time of World War II, okay, after that, many of the economies were, as you said, were almost destroyed. Many, especially those coming in the developing categories, their economic system was somehow scattered because of the war, aftermath of the war, lack of job opportunities, lack of money with people. All these were part and parcel of these economies. So World Bank, based on the conference held at Bretton Woods in Geneva, okay, in 1944, the aim of World Bank when they were trying to set up was to help the nations who were suffering because of the current economic. I was talking about the current economic crisis, which were prevailing after the World War II. So they wanted the meeting was with the objective of setting up with a bank, okay, which can help or render financial assistance to those countries which were facing financial crisis due to the negative impact of World War II. Okay, today also it is otherwise called as IBRD, International Bank for Reconstruction and Development. IBRD, International Bank for Reconstruction and Development. World Bank is otherwise referred to as IBRD. And IBRD is engaged in assisting nations across the globe by rendering financial assistance, technical assistance, guidance, maybe different project plans for improving their economy. They are primarily concentrating on underdeveloped or developing economies like our country, India. Of course, developed countries, they don't need much of financial assistance. So that is why the operations of World Bank aim at the development of developing or underdeveloped countries. Right? The major functions performed by World Bank is to ensure that there is an overall economic development in the global scenario. Suppose if they see that one economy is not performing or it is going down, World Bank has the authority to step in and maybe by rendering financial assistance or by rendering technical assistance, they can try to improve the condition of that economy. So primarily, World Bank is set up to assist the world economies. It can be any country, it can be any nation. They primarily aim at development, economic development of those nations, so that overall the global economy is performing well. Even if one country is not performing well, that will indirectly affect many other nations who are having some kind of trade relation with that particular country who is not performing well. So that's why World Bank think, or the global economic leaders think it as a necessary factor to interfere in such low performing or such economies not performing up to the expected level. They want to interfere in the operations. They want to assist those nations to come up and compete with the other nations across the globe. So that's why World Bank, or otherwise called as International Bank for Reconstruction and Development, is aiming at the development of world economy as a whole. Primarily, they render financial assistance to those who are in need of the financial assistance. So we were talking about banks, classification of banks based on functions. Now, when I'm talking about functions, we may not find individual banks or individual separate banks set up for entering each of these functions. Of course, for industrial bank, we have certain category of banks like IDBI, IFCI, Exim Bank. Of course, they have a separate entity. They separate existence, but in majority of the functions like commercial banking functions, agriculture sector lending, foreign exchange functions. All these are performed by almost all the banks, all the major banks, through different departments within their operations. That's how it has been happening within the Indian market. So when I'm talking about saving bank, I may not find a separate bank for SBI, which is totally engaged in saving function. No, it is one of the department. It is one of the function of State Bank of India to ensure that they are promoting saving habits among public, right, by giving them more opportunities through various financial products and services to invest their money, to invest their savings. Because an investor will come to bank only when he or she is offered with a nominal return, a return that is okay when considered with other investment opportunities. So it is the responsibility of the bank to ensure that the return to savings are offered to the public in the most justifiable form. There is an no, maybe some of you might have heard about the term called opportunity cost. It is the cost of next best alternative forgone for obtaining something. Right. See, if I am putting my money in a fixed deposit with a bank, I had many other opportunities. Maybe I could have put that in the capital market by purchasing some shares. I could have bought some insurance products. I could have bought some or made some investment in mutual fund, or I could have bought a piece of land or maybe a building. But I'm sacrificing all those possibilities. I'm putting my return in with a bank, my savings with a bank. What am I expecting is a reasonable return with less amount of risk. Because when we're talking about nationalized banks or Indian banking sector, people are very confident because RBI, the central bank, has very stringent regulations which are protecting the operations in the, or which are ensuring the transparency of operations in the banking sector. So that's why we are very much confident to invest our money in banks which are operating in our country. So that's why savings as such will be a function rendered mostly by commercial banks offering people with many investment products. Right. Investment products include different types of deposits or different types of investment opportunities, like, fixed deposit, or it could be like mutual fund, investment in mutual fund offered by banks. It could be in different other long term. There is an instrument called commercial paper, right? It can be other instruments which are floated by debt instruments, which are floated by banks from time to time. But that will operate as a separate function within the banking sector. Right, that's what we are talking about, the functions of banks when it is related to the saving function. The same as the case with foreign exchange. When I'm talking about exchange function, almost all the banks, all the major banks within the country would be having foreign exchange as one of their function. They will be having a department which would be dealing with foreign exchange transactions. And of course, if they do not have such kind of arrangement, if they do not have a locker chest to keep the money, they will arrange it for the customers by having a collaboration with their other branches or other banks in many cases. So that also maybe is rendered as a separate department. We may not find a separate entity, a separate existence for rendering that function. Right. So that's about the classification of banks based on functions. Now let us discuss about classification of banks based on ownership. Okay. Now listen to me very carefully. It is very simple. Actually, these things are very simple. Just maybe 1 minute attention will help you to understand it. That's all. See, there are based on ownership, banks can be classified into three categories. One is public sector banks, private sector banks, cooperative banks. And when I'm talking about the public sector banks, the key word I'm putting in quotes, the key word which you have to remember is they are owned by government. Ownership, majority of the ownership is held by government. That's a quote. Majority of the ownership is held by the government. Okay. Then the second part, when we are talking about private sector banks, here the keyword which you have to remember is majority of the ownership is held with private bodies or corporations. Public sector, if I say an example, the most popular one, State Bank of India, or you have Union Bank, or you have Dena Bank, all these come under the public sector bank category. Private sector, majority of the ownership will be held by private individuals or corporations. So that's a code which you have to remember. Example, if I say Federal Bank, you have you have HSBC, you have Dhanalakshmi Bank. All these will come under the private sector category. Okay, and cooperative banks. Okay. Cooperative banks, when I'm talking about, they are owned and operated by cooperative societies, primarily aiming at the development of rural economy, rural bar agrarian economy. Okay, primarily rural economy. Cooperative banks are owned and operated by, in quotes, cooperative societies. Okay, cooperative societies, and their rules and regulations, even though they all these category come under the control of Reserve Bank of India, even though all these come under the category of Reserve Bank of India, but still when we talk about the ownership, that there is difference in the ownership, right? So RBI guidelines would be regulating them. Still, the mode of operation would be slightly different depending on the kind of ownership, right? So public sector banks, the majority of the ownership is held by government, right? Regional rural banks, all the nationalized banks come under public sector banks. Okay. Then private sector banks, majority of the ownerships are held by private individuals or corporations. And the last part, majority of the ownership of cooperative banks are held by cooperative societies. They are owned and operated by cooperative societies. Now, when I look at the public sector banks and private sector banks, all the functions which we were talking about, no, we were talking about lending function, we were talking about accepting deposit function, we were talking about saving function, we were talking about lending loan to agriculture sector, industrial sector. All these functions are performed by them. As I said in the beginning, no, a class can be classified on different ways using different logic. Say, I can classify on the basis of gender, I can classify on the basis of your marks, your hobbies. Likewise, we are classifying the banks. First, we talked about classification of banks based on function. Today, we are talking about classification of banks based on ownership. Right? So all what they do under function, maybe cooperative banks, they have other separate mission like aiming at the development of rural economy. They are primarily looking into the development of semi-urban and rural economy. Right, that's little difference in their operations. Maybe they can have, at times they offer higher interest just to attract the savings from these people, from the rural community. Right, and they have different products which are specifically designed to the needs of the rural community, because they are catering to the needs of that community. Right. So this is what I would like to say about classification of banks based on ownership. I thought we will go with the discussion to the next also, domicile. Classification of banks based on their maybe their location of operation, their registration. Suppose if a bank is registered in India under the RBI regulation, right, that bank will come under the category of domestic bank. Those which are registered, whose registration is in our country, in India, we call that as domestic banks. All our nationalized banks are good example of domestic bank. Now, foreign banks who are registered outside the country, but they have operations within our country. Okay, banks which are registered outside India, but they have operations within our country. Those banks are called as foreign banks. So their head office would be in some other country, right? Maybe in United States, or maybe HSBC Hong Kong. The HSBC is a bank from Hong Kong. Right. So, likewise, all these are examples of foreign banks. But the aspect, the key point which you have to remember is it is classification of banks based on their registration. When the banks are registered within the Indian regulation, Indian Reserve Bank of India regulation, they are registered within the country, they would be called as domestic banks. If their registration is outside the country, but they have operations in the country, they would be called as foreign banks. Okay, so I think we should stop our discussions here and we will continue to the next class. Okay, I'm just going with very little amount of the total portion. So I hope you will slowly enter into this mode of learning and then we can increase the pace. That's why I'm doing it like that, giving you space to enter into the system. Right. So today in our class, we discussed about banks, classification of banks. Oh yeah, initially we discussed about World Bank. Then we discussed about classification of banks based on ownership and domicile. Based on ownership, we said banks can be classified into three: public, private, cooperative banks. Based on domicile, they can be classified as domestic banks and foreign banks.